Good morning, traders. This is a live no trade video recap, and it's 4:28 a.m. here on Friday. I was watching two stocks that I had on my watch list, and I watched them almost to 4:30, and they never really gave me any reason to enter, and they were the highest volume traded stocks of the pre-market, so they had the best potential for giving you an entry and being strong. So FTFT was number 2, Sundial's number 1, but I'm not going to trade that because the float size is so big, and I'm going to show you a great example of why you may not want to trade something like that in this video. So definitely stick around for that. It's really interesting. So FTFT goes on the list. I had WORX on the list from the aftermarket because it was the top gainer of the aftermarket. So here I'm marking out the high of the aftermarket on FTFT, and I'm not interested in any stock unless it can break the high of the previous session, showing that there's a lot of interest in the stock and there's real strength and it has potential to go higher. Otherwise, I'm not interested. All right, let's fast forward a little bit. So now WORX is in the top 3. So before I had it on the list from the aftermarket, but I wasn't going to take a trade unless volume showed up, and it did here. So then kind of the same thing on that. I'm marking out I already had the the high of the aftermarket marked out. So in order for me to be interested in a trade on it, it has to break the pre-market high. So these are the basically the highest volume, low float stocks, and let's see what kind of volume they have at this point. This is at 408, trading with 82,000 shares, essentially the same on both of them, and that's pretty decent. What I'm looking for, at least, well above 10,000 shares at around 4 a.m. or just after 4 a.m. But it's still top 3, so even if there's something with more than 10,000 shares below the top 3, I'm not interested. Because it's all relative. If the stocks are in the top 3 and they have that above 10,000 shares, around 4 or 5, then that tells you that those are the stocks that everyone's trading, and that's where you want to be. So not much is happening here. You can see all these these attempts at reversals on WORX, and they don't really work out because, for example, if you bought for the break of this candle, you're not getting 2R out of that move, not even close, because they would have to be twice the range of this candle. So about there is 1R, and about there is 2R, so it doesn't get anywhere near. And not to say that even if it does, it's a good trade, because it's not, according to my plan, because my plan says that it has to break the high of day. So now I'm just kind of like playing around with resistance lines, just almost out of boredom, doing technical analysis while I'm waiting for these things to show me something, because I notice a double bottom here. So I start looking for a reason why, and there really isn't. So it might just be like a fluke thing. I did pull up the daily chart, and you can see it touches the top of this daily candle, so that there could be something there, but you never know. If you look hard enough for a pattern, you're going to find one, whether it means anything or not. Let's see. Okay, so now look at FTFT. Is kind of interesting because it tries to do a reversal here, and it fakes out, and I'm sure it got some people in there when it broke the high of that candle, and it faked out, and if your stop was here, you would have gotten stopped out. And then here's the second time it does it, and it breaks the high of this candle, and then it chops around a bit, and then it does give an easy 2R. But just because you can get 2R out of a setup doesn't make it a good trade as far as I'm concerned, because these reversals, they work sometimes. That it probably have like maybe a 40% chance of working or something like that. let's see. Yeah, because WORX is trying to do the same thing, and those reversals aren't working out. So here you see a nice strong move, but it's not my plan to get in that type of trade. So I'm not saying I never do, but it would have been breaking my plan and my strategy. So I also noticed here there's some resistance levels there, so I was predicting it to turn around in this area. It didn't quite get there. Again, just kind of like some technical analysis out of boredom. Oh, this is one really cool thing I wanted to show you, is that you notice I pulled up SNDL on my watch list, not because I was interested in trading it, but I wanted to show you the example of volume versus float size and how big of a difference it makes. Okay, so look here at FTFT has the same volume right now as SNDL, right? And then I think I show you the, okay, here's the float size. So SNDL has a 750 million free float size, and FTFT has a 27 million free float size. So let's say that Sundial has 80 times, roughly 80 times the float size of FTFT. So since they're trading with the same volume, that means that volume has basically 80 times the moving power, price moving power on FTFT than it does on SNDL. So let's see if that is really reflected in the price. Let's pull it up over here. This is let's see, what time was it when I was looking at that? Around 4:14 a.m. So where is that at? So there's 4:14 over here. I can put a little vertical line from 4 a.m. So from this time, and let's mark that out on SNDL. And we're going to compare, whoops, that was the wrong type of line. We're going to compare how much the price moved on the low float stock versus this probably, I guess, technically maybe a medium float, if not high float. I'm not sure. Since I focus on low floats, sometimes I forget the range that is considered to be medium and high. It's probably a high medium, if that's such a thing. What did I say, 414? Yeah, so this is the same time range on both of these stocks, and they were trading with the exact same volume at 414. And look at the difference that the price moved here. From 70 cents down, let's say the low was 68.5 cents. So essentially 1.5 cents, probably about 2% overall. If it was $1, it would be 1.5%. So it's probably somewhere around 2% of price movement in that time period. And where this one went from 6.29 all the way down to 5.20, so that's more than $1, and so it's about 15% or so, roughly. So about 15 times, the price moved about 15 times more than this one, just because of the float size. They both had the exact same volume. So I think that's really interesting, and it shows you the power of the float size. So, all right, or I guess the power of a little bit of volume and a very small float stock. Okay, so back to the video. I mean, you kind of saw what happened there on that chart, but basically, I mean, this reversal play ended up working out really well. But again, it's against my plan and my strategy to take an entry, so I can't really feel bad or like I missed an opportunity there, because I would have been breaking my plan to take that. And not all trades that work out as far as being green and going to 2R are going to be good trades, and not all trades that end up red are going to be bad trades. If the trade was part of your plan and strategy, you took it and it failed, it's still a good trade. And if it was against your plan and strategy and it worked out, it's still a bad trade. So the reason why you have a strategy and plan is because you know those things tend to work out most of the time. So you don't want to take trades that you're not really sure if they're going to work out or not. And I know even if I would have got in back here when this one broke out, as soon as this choppiness started happening, I would have started feeling pretty stressed out because I would have known, hey, this isn't a trade I'm supposed to be in. So that wouldn't have been fun. And even if, I took it all the way to 2R, two things happened there. If I felt like, okay, wow, that worked, I need to add this to my plan. When I start doing that, and this, say, it fails the next 3 times, I'm going to wipe out those gains. So, and it's likely to fail the next 3 times because it's not a very strong setup. It just happened to work out here. So that's important stuff. This also looks like the beginning of a very nice ABCD pattern. But this thing is still below the high of the aftermarket, so it doesn't really work out. And I'm going to be 100% honest here. I was not fully, but thinking, very mildly about, well, maybe I should take a trade here. Look at the time, it's 4:21. I've been watching the stock market for over 20 minutes now, and, nothing's happened, nothing good's happened. So that's when you start going into compromising, because you're thinking, I've been sitting here watching this thing, and you really need to recognize that and say, wait a minute, now I'm starting to look for entries that I wouldn't normally take, and maybe this is time to back away. So I let that play out a little bit. I was looking at, this pattern happened here and it ran up, and now it's happening again. Maybe it's going to run up again. And then I said, you know what, this is not my plan, this is not my strategy. I need to step away. And then I stopped recording there because I said, I'm not going to watch this anymore. I'm not going to trade any, or try to take a trade anymore. So that's why the video ends right there. So, and I'll, just in case, because I know some people maybe hide their trades or something, I'll show you that I didn't actually take any trades. I mean, you can see my account is the exact same it was yesterday. My P&L is 0. Filled orders, empty. Order history. Yeah, there's all the way to the top. My last order was yesterday. So you can see I'm not just trying to only show you the good trades or something. All right. I think that's everything. Oh, yeah. So since this is real important, so just hang out for just a minute longer. Since I added this to my daily plan, consider a rule: if there were no good opportunities from 4 to 4:30 a.m., take the whole day off. I'm doing that. I'm going to take the rest of the day off there because there was nothing good for me to take there. And I know if I started trading at the open, I would be a lot more stressed out than if, say, there were some good trades this morning, because this is from yesterday. Yesterday, the same thing happened. There was nothing good at 4 to 4:30. I didn't take any trades. Then I came back later at the market open and took really like 2 good setups and 1 not so good setup, and only one of the good setups worked. So and it really barely worked. So it wasn't a good day, or a good day to be trading. And I still have to put in some data for yesterday, but I have like the basics. Those are the 3 trades that I took, and the first one was not a setup that I should have been taking, so I mark it out in yellow. So that is a dumb trade, to put it bluntly. And then both of these were good setups, but this one's just going to be red because that was a good setup that failed. And then this one was a good setup that was green, and I don't think it didn't quite go 2R, but it got very close. So yesterday I lost 240, and today's going to be a break-even day because I'm not trading today because I didn't see anything good in the pre-market. So I'm finishing out the week green, which is great, up $12. And let me do my weekly percent change really quick here. So Let me see what this, what are the cells? So that's B5 and B10. So put in the formula here. Oops, should do B10 first. Alright, and it's already set to percent, so it came up with the percentage. So we grew the count 2.32% this week. Not bad. It's just a small cash account, so it's not easy to do that. And anytime you can end the week green and above 1% is a good week for sure. So, you know, I could argue it would be a little bit better if I stayed away yesterday, but you know, that was kind of a new thing, experiencing good volume in the pre-market, but no opportunities. And then, you know, that was reflected in the market open. So that's why this is a rule, and it's going to be a new rule. So I'm not even going to consider it anymore. It's a thing now. All right, guys, hopefully you learned something from this. This is going to wrap up my week of trading, and we're ending the week green, up up over $12. Now this is really important. If I would have held everything to 2R, strictly 2R, I would be up theoretically $38, which is a lot more. And I should put like a percent change for if I held to 2R, because that would be a lot more. What is that, about 3 times? It'd be over 6% for sure, maybe 7%, which is really awesome for a cash account. So that's my biggest downfall right now, is I'm having trouble always holding to 2R, and that's the thing that I'm working on the most. So and I have my 2R profits here versus my actual profits. So, and whenever the numbers are closer, like here, this is like $7.50, $20 here, that's a reflection of me doing a little bit better, you know, holding the 2R. And same thing here. And then this is an example of when I didn't do what I was supposed to, which is either hold to 2R or stop out at 1R. So so I would have actually had, look at this, so if I'm holding the 2R, I would have had 2 red days and 2 green days, but instead of, so this is 3 green days and 1 red day, 2 green days and 2 red days. Well, look at the difference in the P&L. So that's the power of 2R trading. Of course, that's theoretical, but hey, even if I got halfway there, you know, through real trading, that's better than that amount. So, all right, guys, hopefully you learned something from this. And this whole week of trading, I've been getting a lot of great comments and questions, and I'm trying to do my best to give you guys good answers. So let's keep that going. And I will see you in the next video. There might be something educational coming out later today. We'll see. All right, take care.